Okay, good morning everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning on Tuesday, October 11th. So, the dollar's making a run again at the highs. We had warned earlier in the week. Still thinking that we could get an exhaustion here, but it doesn't mean that for the next couple of days we can't see another run. The DXY, ICE dollar index, making a little bit more of a concerted push into a key region, 97.23, 97.24. We'll talk about that in a moment. A longer dated 618, the high day close from July. We're probing that right now. The US dollar index, the Dow Jones Fxcm dollar index, a little bit more key resistance here. Okay, this is the exact highs that we tagged on NFPs, and we'll talk about that as well. Obviously, we'll talk about the Kiwi dollar and Aussie dollar from last night. Aussie dollar specifically coming off near-term support. We'll touch base on euro and dollar yen from the previous night's updates. D wants to take a look at some other euro crosses, euro key. We'll definitely take a look at. Don't really have much to say on the pound and the pound crosses in general, but we'll definitely take a look. Pound yen would still be my favorite setup if I was forced to take a position on that. And then we'll open up to any other questions, guys. Obviously, as always, if you have any questions or trade setups, feel free to throw them on the message board at any time. Good morning, Adam. Great to see you in the room. D, as always, Eileen, Conwall. Hello, sir. Thank you for your valuable analysis. More than welcome, Conwall. It's my pleasure. We'll definitely take a look at crude and all the commodities, crude, gold, and silver. Let me just jot that down. I got you. All right. To start off the session, you can see here's the relative performance of the dollar versus all its major counterparts. Kiwi being the worst performer in the session, down 0.78. Same with the Aussie, down 0.71. I like a little bit more where Aussie is right now as near-term support. Could see a little bit of a rebound, still looking lower. As far as Kiwi dollar is concerned, also looking for near-term resistance there on an opportunity to possibly get short on that side. Dollar CAD responded to not major, but the weekly open just a couple of moments ago. So another one we'll cover. That's down 0.25% on the session. Yen holding its own. So you can see dollar yen is pretty much unchanged. And we'll review that one as well. All right. Let's jump right in. So as far as economic data is concerned, you really still don't have much on tap today, okay? It starts to pick up tomorrow with the release of the FOMC minutes. Keep in mind, the minutes released this week is unlikely to have a larger impact. Typically, when the minutes are released on the meetings where we have the presser with Janet Yellen, you're really just looking for the consensus, okay? What the individual concerns were. We already know the vote count. We've seen the new projections, specifically as they pertain to growth and unemployment and interest rates. So, unless there's some serious dissent or a new revelation, you're not likely going to see too much volatility on tomorrow's FOMC. As it stands, that's at 2 p.m. tomorrow, actually, guys, right after the webinar with Jamie. As it stands, here is what Fed Fund futures are pricing in. So they're not really reflected here as much as the CME. If you go to the CME's website and check Fed Fund futures, it's actually showing 70% right now for a hike in December, essentially, with November's continuing to dwindle lower and lower, now down just at 19% probability. Look, at this point, it doesn't really matter. Anything above 60 pretty much leaves the door open and pretty much is what the markets are as a consensus are pricing in for an interest rate hike in December. November is pretty much off the table. No one's really realistically expecting any type of tightening next month. So with that said, here's what the dollar indices look like. I'm going to start off real quick with the Dow Jones with the ICE dollar index, excuse me. Although the Dow Jones a little bit cleaner, I think, at this point. But here's what we're flirting with today, guys. This is a basic trendline resistance extending off the highs from December. You can see that slope, we talked about this yesterday in the webinar, has offered some pretty nice, decent pivots in price. Okay. That pretty much broke until yesterday. And here's the closes look like. Until yesterday, even yesterday's close was right at this level. So I was still on the fence and looking for a possible exhaustion blow off for this thing to turn around. This would be the first close at 97.23, 97.24 is what I'm looking at. The close here is actually 97.26, excuse me. 97.23 is a 618 of the entire 2016 decline off that December high. And a close above here certainly suggests the risk for more prominent breakout in the dollar. So we're going to see how today looks heading into tomorrow. Keep in mind, momentum hasn't closed above 70 yet, but we're starting to venture into overbought territory. Now, the Dow Jones Fxcm dollar index looks a little different. Okay, remember that key level that we capped out on NFPs, 12,170, 12,173. You're basically looking at that 786 retracement. This is of just the 2016 range. Obviously, this indice topped early in January as opposed to the ICE dollar index, which topped in December. But you can see, again, long-term slope. We talked about this yesterday. Converges with that 786. And some median lines here extending off the lows of the current operative slope. So a blow-off exhaustion, I don't know. We still haven't gotten a close here above the yearly open either at 12,131. So I'm just cautious. Now, from relative speaking terms in trading-wise, dollar strength, I still do like playing through Kiwi. If we get an opportunity through Aussie. Dollar weakness, I do like playing through dollar CAD. Not so much the euro anymore at this point. We'll talk about that in a moment, but dollar CAD is really kind of go-to on some dollar weakness if we get that more material pullback off 12,170. So know these levels, okay? Even if we can't trade, if you're trading stateside and can't get involved in these indices, or indices rather, from a trading standpoint, it's still important to keep these levels in view, kind of give you a little bit more confirmation of what the base dollar movement's doing. What's interesting to me is that nothing has really materially shifted as far as interest rate expectations, Fed policy. So I'm still a little bit weary here. Questions on the dollar, whether it's the ICE dollar index or the Dow Jones Fxcm dollar index. Pooja says 97.62 is the high day close from December in DXY. Last level to look for exhaustion maybe? $97.26, right. From last December. Okay, I see what you're talking about. If you talk about Pooja, I have the high day close here for December somewhere way up here. I'm not sure if you're looking at the a different feed. 97 is going to be the high day close from August. Right here, 97.26. So yeah, I still think this could be exhaustion. I want to see where the day closes. I'm very mindful of trying to chase any type of strength up here at this point. But if it does close above 70, even in momentum terms, you know, typically you could see a nice stretch from here. Here's the last time that we pushed through 70 in momentum on a daily close basis. You still had a long way to go before it capped out. So today's close is important for me. Today's close is important. Okay, so let's jump into yesterday's piece. We're going to just cover real quick the Kiwi and Aussie. Of the two, I still like Kiwi dollar. We'll touch base on dollar CAD, which just reversed off the weekly open. Here's what Kiwi dollar looked like last night, and I kind of just wanted to highlight where we were on the daily chart as well. So heading into NFPs, we cited that the short side bias was at risk above 71.19. And into last night, that was still the case. Now, I was looking for short triggers, kind of didn't really get the opportunity to get in myself, but 71.19 was the near-term support that you need to kind of respect. With key resistance on a daily basis, still 72.20, 72.18, this region here. Now, heading into last night, here's the trade look like. And really, that 71.19 was the barrier of entry that you needed to kind of get through to expose those subsequent downside targets. Here's what Kiwi looks like now. Okay. well, first of all, let me go back to the daily chart real quick. So you did finally get that break. Sliding parallel here has given way. The bigger sort of longer term target is a 38.2, basic 38.2 of the entire yearly range, which also coincides very nicely with both the highs that you made in April and May. And that comes in right around 70.50. So we turn just ahead of that right now. Here's what the 30 or the hourly looks like. We turn just ahead of it right now. Near-term resistance, former support, 70.86. Levels remain unchanged from yesterday. Okay, there's that 70.86 target. 70.50 we just missed on that turn, and now we're testing 70.86 as resistance. So the levels continue to hold exceptionally well. I'm still looking to sell rallies here. I'm a little hesitant to get involved on the short side from down here, but if you do get an opportunity where this thing pops up higher towards 71.18, or specifically one of these two median lines, I'm looking for a short trigger there on a final approach into 70.50, but I do still think you get down into 70.50 and subsequent targets a little bit lower with this median line, around 70.20 or so. And on the daily chart, that's what this is. Okay, so pretty clean on the Kiwi. I just didn't get an opportunity on this small rebound here to get back in. It was actually a decent break of the Asia opening range high, but or opening range low rather, excuse me. But missed that one. Any questions on Kiwi? The levels unchanged, pretty clean, straightforward setup here. Now, in a longer-term approach, if we do break that median line that you see in red there, sub 70.50, you're looking at 69.60 into 69.70. Specifically, 64 would be a 1618 extension off the decline off the highs here, and the Brexit swing low actually comes in right there at 69.70. So, sort of a sweet spot there if this thing really continues to push lower. What's the next target after 70.20 deep? I think I just answered it. Did you get that? 69.64 into 69.70 would be the next target. You're looking at downslope support, okay, and that confluence of fib levels. Let me zoom this out to a 4-hour here, just kind of give you a picture. But be mindful of 70.50 here near term, just because of the swing highs that we made, like I said, in April and May. With that confluence fib support, you could get a rebound here. But broadly speaking, still looking really, really nice within the confines of this formation here. Where did those trend lines originate? Zoom out. In Kiwi, Eileen, daily or the 4-hour here? Let me clean this up a little bit. Don't need those no anymore. Extraneous targets we've used up. The 4-hour, sure. So you might not be able to even see it here, but yeah, you can. So this trend line just originates off the low from January. So just taking into account the 2016 slope. You have one extended here off the high that you made in, what was that, April? The one that was extending off the high from June actually did catch the considered high that we made right in September. And just some parallels off some swing lows here have been offering some really nice plays. Don't want to go nuts with it, but you get the picture. Eileen says, okay, good, thanks. D says, you just did? All right, cool. So if there are no other questions on this, we'll put this to bed for now. Still very much on the menu for me. Like I said, Kiwi looks a little bit, or Aussie rather, looks a little bit more appealing just because it came right into the target and it's kind of sitting there right now. And also, one other thing on the New Zealand dollar, we don't have any data on tap, but we do get tomorrow, we do get the release of the house sales. And with all the talk that's been going on in the housing industry there, it might be something to take a look at. That's tomorrow afternoon, right after the close of trade here in New York. CPI figures next week will be a little bit bigger. All right, so Kiwi dollar going once, going twice, sold. Next up on tap yesterday was Aussie. That's a little bit cleaner of a play. Really nice reversal. We had a short side buy, sub 76.10 here, looking for a move into 75.45, and that's really the level of which I really liked a little bit more of a bounce. It was where we were looking for that stretch last week to stretch into. We didn't get it, but here we are now. Looking at downslope support, upslope support, okay, the 50% retracement of the advance from last month's low, and it all kind of converged right here. Just below that, you have the 100-day moving average, so I'm still very mindful of. So you could see a little bit of a rebound, still like the short side play broadly speaking, and again, on dollar strength, one of my favorite moves here. So starting with the daily chart, so we kind of just walked right into that stop right now, and we're just sitting there for a little bit. So a rebound off this into the U.S. Open, maybe to offer another position. Again, next downside target, that 100-day moving average comes in at 75.25, so not too far off. And it's backed by this median line. So you're coming in some interesting areas where I'm a little iffy on getting, let me take a step back, getting a little iffy on getting fresh short exposure in here. If you can get it ahead of the 75.40 break, cool. If it breaks down, I wouldn't even be scalping or intraday trading on the short side in this zone just because you have last month's open. I just don't want to get wicked out. So we're looking for a near-term rally to sell. Inevitably, looking just for the lower parallel. Again, the cleanest out of all the daily charts on the dollar crosses, my humble opinion, still remains the Aussie dollar. Here's what it looks like on the 30-minute, or the hourly. And here's what it looked like last night. Okay, so quick decline. Didn't really get, again, if you weren't already short, didn't really get an opportunity to get back in. But here it is, making some divergence into the lows on slope support, 75.45 right on tap. Near-term resistance, 75.70, 75.73. Initial area, I'd start to look for some possible re-entries. On a break lower, you're looking for that 75 handle, essentially, 74.96 into 74.99. That's down here. Now we're going to bring down our bearish invalidation level from 76.50. At this point, I'd be comfortable bringing it all the way down to the 76 handle. Okay, you're basically looking at the weekly open, this parallel, which has already responded twice as resistance, and a basic 38.2 of the entire ascent off the lows there. So a nice region of which we'll deem near-term bearish invalidation. As long as we stay below this, you're looking to sell a rally, inevitably targeting that 75 handle. But near term, just be cautious about this. I was watching this morning, trying to get back on the short side. Here's what it looks like on the 5-minute. I'm still interested in looking for a short trigger for some short entries. I just want to see what the U.S. Open looks like. Ideally, if we can get into here and we get a decent short trigger, that's kind of where the sweet spot is for me, I think, near term. So just something to keep in mind here on Aussie. Don't have anything compelling here just yet. Questions on Aussie dollar? Keep in mind, if we do make it into 75.70 again, by the way, you know, that's actually the range highs for London here. So kind of a decent area to start finding some resistance if we're going to continue lower. All right. Any good times of day to watch Aussie these days for good entries? You know how I trade, Eileen. I'm still kind of a sucker for the Asia Opens. Usually a lot of the positions that I take are somewhere in the range of, I want to say like 8 o'clock to 11 o'clock here in New York, p.m. It's just kind of the shift that I really do all my analysis, usually in the aftermarket close, and then start to look for some new positions on the entries there. So that's still kind of my sweet spot, especially for the Aussie, for the Kiwi, for the dollar yen. Euro still, pound still looking at, you know, the Asia-Europe crossover as the best entry there. But these days, you never know, because you could get into the open of Asia and all of a sudden pound dollar can drop a good 600 or a good 6% on the day, right? So we'll talk about the pound if you guys want. All right, so for another questions here on Aussie dollar, we'll go ahead and move right on into support. Watch that 75.45 target. You need to get through that to make your next downside move there. So let me keep track here. 1 was dollar index, 2 ICE, 3 Kiwi, 4 Aussie, 5 let's do real quick just dollar CAD. Here's the loonie looks like. And here's what the loonie looked like last night. So a quick slope here off the high had me shifting the focus lower, kind of looking just from the reaction that we got. And again, let me show you the daily chart real quick. This is a pretty strong reaction, something you don't want to ignore. Remember we had that soft target at 32.95. That was just that swing high they made back there late in March of this year. You came right into it. You closed below it. You gapped at the open. So you filled the gap, tested the highs from September, and closed reversal on the day. That's pretty bearish for me. And this is the thing. This is where we get into studying price action. You know, it's not necessarily a candlestick formation. I can't look through a catalog of candlestick formations and identify it. But price action to me here is speaking, and to me, around that 200-day moving average and around the cluster of resistance that we've been scoping out for the last 4 weeks anyway, it still looks a little bearish, okay? You're getting radical divergence on the momentum scale on a daily basis. Look at the line chart. Higher high, higher high, higher high, equal highs, or even lower in some instances. So I still think it's tired. You got a median line or a basic trend line trigger, support trigger here in momentum. Look out for it, okay? The confirmation isn't there yet. We haven't gotten the break, but that's what I'm watching. So I do want to see this give out. The risk remains lower, in my humble opinion, below 32.54, which is this region right here. Let me just drop a marker there. And on a weaker dollar story, again, this is when I'd be interested in playing. Here's what it looks like on the near term. As we stated in yesterday's piece, the last few days have us looking lower. Near term, reversal targeting 30.30, okay, and 129.87. Focus keeps the focus lower below the weekly open at 32.37. That's what I was looking for. So basically, that's exactly what we just did. This thing rallied in overnight trade. Here's what we were looking at. There's 32.37. We came literally right into it, 32.37, and turned lower from there, right back into the 32 handle. So coming into just ahead of the webinar here, obviously, I had a really nice opportunity to get in. At this point, you're right back at that pivot. So watch for near-term support, momentum. Beautiful swing right off 60, and that's divergence as well. Higher high in price, lower high in the oscillator. So these are the kind of triggers that you really kind of want to pay attention to the most. Kind of just a missed opportunity here. I have a question on your trade size. Do you do the 0.25, 0.5, etc. size trades when you are intraday trading, or do you adjust your trade size to the width of your stop? On dollar CAD, anything to the fact that it hasn't closed the weekend gap yet? Yeah, obviously that risk always stands. Let me address your first question, Stephen, and I'll take your second question on the weekend gap. It could be a breakaway gap. You never necessarily want to just chase the gap, but let me take a step back. As far as trade size is concerned, no, I definitely make my trade size a little bit more variable. I don't want to necessarily equate the trade size to the width of the stop for sure, but it's the more conviction I have on the position, Steve. So if it's a position that I think I could, look, if the quarterly, so many thoughts going through my head. Here we go. So Steve, if a quarterly ATR is giving me like 25 pips, but I think I'm at a little bit more of a key support barrier, I'll load up a little bit heavier on that trade, okay, because I want to sit it out longer. And as we go through the targets, I'll peel more off, I'll peel more off, I'll peel more off. If it's an intraday trade in the truest form and then I'm literally looking for a quarter daily ATR and get out, that one will be a little bit more based on, okay, what's the stop on this trade? Sure, let me reduce the trade size as such. But I just want to say, my basic point is saying, Steve, that the trade size, in my humble opinion, for my personal trading, is all based upon how much conviction I have on the trade. How many pieces of evidence, how much evidence do I have to support this trade idea? Well, there's divergence, prices at resistance, we're seeing some exhaustion in near-term price action, the opening range broke, right? The more pieces of evidence I have to support it, typically the heavier the leverage I'll go on that position. But definitely, Steve, if I'm trading a pair like pound yen, okay, and I have a 50 pip stop or a 40 pip stop, yeah, I mean, that's, common sense will dictate typically on those positions I'll be a little bit lighter. Again, unless I'm looking to take a little bit longer term of a stance. Steven, does that help? I don't have like a straight formula that I work with. It's really more based on, I take every trade on its own merits. Okay, now on the dollar CAD question, he says, yes, thank you, you're more than welcome. On the dollar CAD question, anything to the fact that it hasn't closed the weekend gap yet. So look, it tried to close the gap and turned away. I see what you're talking about. At these levels, no, I wouldn't really put too much stock into that. There's nothing to say it has to fill the gap, right? The markets can have breakaway gaps all the time, and it could take a couple more days before it fills. It could take a couple more weeks before it fills. Gap plays for me are a little bit more, what's the word I want to use? A gap play for me would be something a little bit more sexy if it was somewhere like this. Okay, where you're at support, the gap breakaways in the direction that you're looking to play. So you're looking to fill the gap to get short again. This would be great if we fill the gap to get short again, but that would require us to get back above some key resistance targets. So remember, it's all about the levels. It's all I care about. And at this point, with what price action's doing what it's doing, we're back below the 200. I kind of want to keep this thing, you know, below the weekly open. I kind of want to see it do exactly what it just did. If we blow through the weekly open, I'm more neutral, not necessarily bullish. At that point, Stephen, I would look for that gap fill to possibly see another entry point or another exhaustion. But as it stands on the direct drop that we're seeing here, no, I kind of want to see it hold below the weekly open at this point. Does that make sense? He says, got it. All right, cool. Any other questions on dollar CAD? It was number 5. All right, moving right along. After dollar CAD, let's touch base on euro from the previous night. Here's what euro is looking like. And here's what euro looks like right now. So before we get into the hourly chart, the daily chart, big region. Big region. We're testing it right now. That's this right here. Okay, last ditch effort, major, more major structural support. Look, if this thing gives out, I think we have a clear-cut range right back into 109. And that'd be a nice, decent little 100 pip play to the downside. You got the yearly open at 108.72, which would probably be a likely target this thing would run into as well. But pretty major support here coming up for euro dollar. You have 110.85 as the Brexit, the 618 retracement of the Brexit advance. So this is the advance off the Brexit low. You have the reversal day close, which was also basically the Brexit close right here. And that outside day that we made on the 5th, of July. So that gives you a range of 110.74 into 110.85. It's exactly where we just found support. And dribbled a little bit lower right there, 110.72. Actually, I don't have that reversal day on there, so let me copy that for you. There. And even on the near-term approach, again, you have 100% extension here. That plays out pretty well at 110.82. So largely speaking, this is a big area of support. Wouldn't be too surprised to see a little bit of a rebound. Near-term resistance now, former support, nice slope line there, 111.24, 111.23. Okay, now I was just talking to Jamie about this as well. I do think if it gets into that region and you find some short triggers, this actually might be a decent area to get back on the short side for an approach into that structural longer-term median line off the 2015 lows. For me, I'd want to see it hold below 111.40, okay, right here. We kind of start to venture back above that, sort of gravitate back to the 200 and 100-day moving averages. I don't want to be caught in that little sort of chop fest again. That range has been sort of treacherous for this thing over the last couple of weeks. But just know where you are in trend. We're at a pretty big juncture. I do think you get a little bit of a rebound. If we get back towards 111.20, 111.40, I'd be scoping out both those levels. If they hold as resistance, I'd be looking for a final breakdown. This thing has been coiled up and it's ready to do something. Okay, something's got to give way. And what the dollar index is doing, both on the ICE and the Dow Jones, something's ready to go out here. Good morning, my pal. I'm looking at 105, a December low. Nice, says Kelly. 105. I have 105.90 as a basic 1618 from the decline off the yearly high. But you know how I trade, Kelly, one step at a time. For my purposes, for our purposes here in the webinar, closer, nearer term, that's a long ways out. You'd have to actually break through the yearly lows at 107. Very possible, but I have a lot of things ahead of that. Okay, the low day close from last year comes in this region here at 109.36. Excuse me, that wasn't the low day close. That was December low day close from last year. The yearly open, obviously. Let's tack on. I'm surprised I don't have it on here yet, but let's tack on a retracement. Ha! There's a 50% right there too, right off the entire advance off that low. So I'll leave that there and let me clean up the rest. We'll remove it for now. You know what? At this point, you could probably get rid of 1085 as well on the daily chart. So there's the amended levels near term. If you want to take a snapshot of that chart, guys, to accommodate for the update that we made earlier in the week. Just a quick slight adjustment to the support, but watch this region right here, okay? Make or break here for Euro. Any questions on Euro dollar before we move off? That's number 6. All right. Dollar yen. Also from the same update, here's what dollar yen looked like earlier in the week. Still getting a little sluggish here. Here's what dollar yen looks like now. Okay, we did find support just ahead of that 102.65 level here yesterday before turning back up. Still like the upside, broadly speaking. I do think you probably have a little bit more consolidation to go in this thing before it finally makes a break. It's dollar yen. Tomorrow's FOMC minutes. You could see that low start to play out again, but still looking near term above 102.65 to the upside. Broader bullish invalidation 101.60. 4. So as long as we hold this, you're looking higher in the broader trend. And sort of a region we need to get through, that 104.80 level, confluence resistance of both 50 or the 75 level of the downtrend support, resistance and the median line off the low. Here's what the hourly looks like. Again, I know this is a little bit messy of a chart, as I explained earlier in the week. I do want to keep that old slope in play just for now. Probably get rid of it over the next day or so, but they all lined up at 102.65, 102.60 to start off the week. So right off the bat, I was looking higher while above this region. And that's still going to remain more or less near-term bullish invalidation. 104.50, 618 retracement off the low, off the highs, and then 104.80, 104.90, this region here. A little bit more of a major near-term target on the upside. So buy pullbacks while within this formation. Bullish invalidation 102.60. Not much there to update. It's a slow grind higher, but all targets remain same. We went to 104, came back 103.50, held support, and that's the range we're playing right now. All right, that's number 7 and completes pretty much all the majors that I'm looking at. I do want to jump into your questions. I do have a couple here. Obviously, gold, crude, and silver. We'll take a look at that in just a moment. Conwall. D, I do want to cover some of the things that you're asking about. Euro key. I don't really have much to say about dollar, sterling dollar, but we'll take a look here. Any other questions on dollar yen before we move off? Here's what Euro Kiwi looks like, D. It's actually a pretty interesting setup. I think you were the one asking about this last week, and we were watching that 156.47 target as resistance. We closed the week below it. Here's the break, and it's pivoting right off it as support. And a nice touch of that 38.2 retracement. Let's add that to the scalp chart here. It's a tricky one. It's a tricky one, D. This is what I would say. I'm not sure what positioning you're holding against this or in this, if you're in this at all, D. But here's what I would say. You're definitely, I do like the long side broadly speaking. I think near term, you're at risk for a pullback, a little bit more of a setback below 57.45. Not just because it's the 38.2 retracement, but also note that it's the high day close here for July. And also pretty darn close to those swing lows that you made earlier in December of last year. Not only that, but momentum kind of looking a little bit tired here, and you have a clear support trigger. So if this gets out or gives out on a closed basis, you might get a little bit more of a pull to the downside. My other problem with this is that I'm not really too keen on playing this short because I don't necessarily want to be long Kiwi. So if anything, I'd be looking for a pullback to get back on the long side. D said, oh, long, here it is, long at 53.50. Oh, you're in a nice position here. You're in a nice core position. Yeah, I mean, you're good, I think, as long as you stay above the monthly open. So above 54, I wouldn't really be too worried. I'm not sure what your longer term objective target is. Wouldn't be a bad idea, in my humble opinion, if you get back near 57.40 to kind of peel some off. That definitely would have been an area of which I'd like to have taken some off the table. But pretty much above, I mean, played a little bit more conservative would be even 54.70, the breakout zone that we were watching all last week, or earlier last month. Put the monthly break in here for you. D says targeting 162. Okay, so you're looking for a little bit longer term of a play. You're willing to sit in this for a while. Yeah, this is the formation I'd be looking at. As long as you're in there, I think you're all right. I think you're all right. And I do like the broader upside play for that. Generally speaking, I just think at this point you might be in for a little bit of a pullback. Yeah, I'd play it safe like that. D's asking about a stop below 54.60. I would play it safe like that. Again, for me, the confirmation would be a break below the monthly open. That's basically 54.08. But yeah, if we get back below this pivot here, kind of would want me to, would shake me out. Yeah, says that way at least I have something. I mean, D, for sure, yeah, you want to have your money, your stops on the inside on a trade like that. You know, I'm very reluctant to ever put a stop at break even when I'm that far ahead. So yeah, 56.60 would lock in something. A break below the monthly open would sort of make me think something else is up for the reversal. Nice trade. Well done. Yeah, you're more than welcome. So that's Euro key. As far as pound dollar, so let me write this down. Euro key. That was number 8. Pound dollar, look, guys, if you're in a longer term position, let me know if there's something you want to talk about. If you're looking for new intraday scalping opportunities, trade opportunities, just not my cup of tea. What can I say about this? Again, we're getting divergence into the lows. Again, it looks like a long trigger just gave out to the upside. Do I want to take a position on this? Hell no. I don't even know where would the stop be. It would have to be against this swing low. You're already kind of, 100 pips off that. So it's just not something for me that I'm interested in necessarily intraday trading. If anyone has a specific question on this, or D, if you have a specific question on this, I'll be more than happy to answer it. But from my part, there's really nothing here in this for me to get involved in. Eileen, we got your email, and I think Jamie responded to you yesterday. So, yeah, to answer your question, I actually personally wasn't in sterling. I'm lucky that I wasn't, but it still has been completely taken off sides. And I got forwarded your email. It's kind of on the plate with dollar Swiss for me right now, or the Swissy in general. So if I felt compelled to trade sterling, I would be in sterling yen, if anything at all. But for me, pound dollar right now, I think this is kind of, we're just chasing our tail. All the rules that we set forward as sort of go-to rules, guys, would be foregone if I start to mess with this right now. It's in oversold territory. You're in uncharted territory as far as price is concerned. You're not near an extreme for the month, either the extreme for the month, either the high or the low. You're right slap in the middle of the monthly range. It is only the 11th day of the month, but we've already made such an expanse that you're not near resistance or support. Trying to play this on a momentum basis, has little bearing in my humble opinion, just because of the possibility it's some clown's going to come out and say some kind of policy change, and you're going to see this thing all over the place. And who would be buying or selling sterling now? A lot of people, Eileen. The open interest is still there, but that doesn't necessarily mean it's a good trade, right? So again, part of our responsibility here, guys, is kind of pointing you in the right direction, and above and beyond, sometimes even putting you on the right trade is steering you away from where the opportunity might not be best suited for us. And right now, I think the pound is one of those. I think we will get some clarity in near-term price. I think we'll get much more opportunities once the dust settles. But on the back of an expanse like this, I'm going to sit this one out. All right. So pound dollar, number 9. We're going to run through that one. Let's jump into the commodities here for Mr. Conwall. Conwall, here, I watched the pound drop live. Scary. Wow, that was a shocker. Yeah, Kelly, it's it's interesting. I'll tell you a secret, because we were having dinner with some of the executives, actually the CEO of IG, who had flown out to New York here, and it was very interesting to see his reaction as all this was going down. But yes, it was quite the shocker, right? You get flash crashes like that. Best thing to do if you're not in the position is to kind of sit on the sidelines till dust settles for a while. Kelly says, do brokerage houses get hit with a move like that? So it depends if it's a dealing desk or if it's an ECN. First of all, Kelly, typically, the dealing desk won't get a hit as hard as an ECN is because it all depends on the liquidity that they're using. All right, and if they get gapped, obviously that difference is the hit, right? So it's not necessary, no, that you'll see. The S&B event, the S&B event for the Swissy was an unprecedented move because literally brokerages all across the world were gapped like 1,700, 1,600 pips sometimes. So it's massive move, right? Massive, massive move. And there's no liquidity on a 1,000 pip drop. That's when the brokerage really takes a little bit more of a beat down. But this is not quite on that level. It doesn't seem that there was quite as big an impact because again, it was at an interesting time of day, but liquidity was there on the way down. So I don't really buy this whole fat finger nonsense excuse. All right, back on topic. Kelly says, well, thanks, was just wondering. Yeah, you're more than welcome. So commodity block, here's what it is. Let's jump through crude, obviously making headlines here. As we noted yesterday, no change to any of the levels on crude. I still think you're looking higher above 47.72. Near-term support still right around 48.97. We turned just ahead of that yesterday. We are making an outside day, or yesterday we did make an outside day reversal at the highs, which, as I always say, sometimes at these levels, this would be a much more significant technical factor if it happened at support. But an outside day reversal to the upside at the highs, for me, sometimes, if you go back, can indicate near-term exhaustion. So you might be in for a pullback here on crude. Long story short, I still like the upside while above, like I said, the monthly open, former major key resistance and longer-term resistance dating back to the highs, swing highs you made here in 2015. Topside targets 52.50 and 54.29. So you're kind of in no man's land here. You might get a little bit of a pullback. Wouldn't necessarily stress, obviously, the high day close anymore. We've sailed through it a couple of times. Just going to leave it on there for reference. But once a new high is in place, we're kind of going to scratch that target. Near-term resistance, 51.60 is going to be the high they actually made here in June. So looking to buy pullbacks for those topside targets at 52.50 and 54.29. Questions on crude prices. Conwall, anything on this? I think you had a position that you threw at me earlier, right? Let me scroll up here. Oil, you're short from 51.26. So you're short from this level right here. Yeah, I mean, you're looking for a counter trend pullback on this, Conwall. So I wouldn't get too aggressive on those just yet. Okay, let's see what it looks like on the near term. Maybe I can help you out. You are marking some divergence, by the way, on the daily chart. So I do see the kind of mentality you're looking for a pullback. Your counter trend, though. Just keep in mind, this is a counter trend trade you're in right now. It does look to me like this could be a 1, 2, 3, 4, 5. Again, you'd be looking for a five-wave exhaustion pullback from here before completion or continuation higher. And you do have these highs to contend with. Oop. Okay, this is what I would say on this one, Conwell. The conditions are right for the levels of which you'd start to look for a near-term exhaustion pullback, but we haven't gotten the confirmation yet. So I think you might have jumped the gun just a little bit. Don't want to shake you out of the position. Watch that high at 51.63. Watch this momentum trigger right here on the hourly chart specifically, and the only caution I have for you is you're trying to call a high. Typically, we want to play this after the turn, right? So whip into resistance, which you haven't quite made it into, a pullback. And on the approach, you'd have the opportunity to get short against some sort of high. Watch the U.S. opening range. I do favor a pullback from these levels. We just haven't gotten confirmation near-term price. I think that's really materializing just yet. 30-minute chart. Okay. And even as your downside target, I wouldn't get too aggressive more beyond like the 50 handle near term. Right around here. Nice pivot in price, and that coincides on basic slope support right here. All right, Conwell. But look, if it makes it through 51.60, you're just trying to call a high. Okay, there's really nothing until 52.50 again. So just watch that resistance region right there. Okay. Hope that helps on crude. Any trade or any questions here on the crude setup or crude levels? You're more than welcome, Conwell. All right, moving right through. Gold looks like this. The pullback still holding above that major support level that we talked about in the webinar yesterday. Could get a rebound here. Do think you might inevitably break lower in this is silver. I'm sorry. In gold to get a larger tag of that larger key support region. Remember the gold chart that we talked about as far as the weekly charts are concerned. That's still sort of the focus for me. So on the weekly basis, there's still a little bit more room, in my humble opinion, for this thing to drop into a critical longer-term slope support, the 52-week moving average. The 50% retracement leaves us room at least for cut as deep into 1210. But largely speaking, that's sort of base case scenario of what we want to do, what I want to see the drop for gold, as long as for us to stay constructive on the broader picture here. So that's what I'm thinking still with gold. Think you might get a bounce from here, still looking lower for a little bit more of a key support into 1210. Silver, if the chart changes, here we go. Silver did come into that, again, same support that we're talking about, resistance 1785. Could see a swing up a little bit higher. Would love to get short if we can near 1850. 1843 is more the level, 1843, 1847 region. With a break to the downside there, really targeting 1615. Note how important this support level is, though, near term, which is why I think the rebound probably has a little bit more juice than this before it turns over. Largely speaking, you're still bearish below 1843, 1847. All right. Quick run through of the levels there. Kamwa, let me know if you have any questions on silver. If you're holding anything on that front. There was a trade I also just wanted to really quickly go through from last week on Kiwi CAD. He says, I want to take a position on silver. Fresh position from silver here would require for me either a run back into 1843 or a break of the 200-day moving average here in a zoom and retest. So I would need a break below this, a pullback to get short against, and then I'd be looking inevitably for a drop into 1635, 1651. But this is pretty big near term. We might hover. You might see some sideways price action here. So for our purposes, Conwall, in the near term, keep your focus on the weekly opening range, which is pretty well defined already. 1785 is resistance, this piece right here, and then this support barrier into the 200-day moving average. If you want to play this range, feel free to, but I'd love to get shorter from a rally higher up if we get it. This is what the near-term slope looks like, by the way. I think we put this together here in the webinar a couple of days ago. So again, it highlights that 1843 range is resistance, downside break, whoop. 1651. I'm not a real big fan of the slope, just to put that on the table here, Conwall, but this is what I would be considering if I was entering position here on silver. I do want to take a quick look at, I know it's an interesting pair, but we've talked about both the Kiwi and the CAD. This is the setup from last week, if you guys remember, on 10.5. Here's Kiwi CAD setup. And the basic premise here was that you were coming into the yearly open, you were coming into that 94 target, which completes 100% extension, stay bearish below 95.50, look for a drop deeper. Next to that downside target would have been 93. It actually progressed really nice. Here's what Kiwi CAD looked like early last week. Here's what Kiwi CAD looks like now. Okay, so you're basically there. We turned just ahead of 93. But here's what the daily chart looks like. It's been a pretty straight shot ride from last week. Okay, so you actually did materialize into a nice rebound off of that key support zone. That rally fizzling out ahead of our bearish invalidation level. And then here it is on the drop, major key support confluence, 93 handle. Note that the 100-day moving average is the exact low. It's literally the exact low that we made today in price. You have a slope here extending off the lows that you made from March of this year, a 38.2 retracement of the advance, obviously, and downslope support. So there's a whole lot here. And I do think at this point you want to kind of take caution on the short bias. You're down here. You want to take caution that you could see a near-term rebound, which is, again, having me caution a little bit. The Kiwi dollar, right? I think you could see a little bit of a rebound there to offer us re-entry. But I just wanted to highlight that key support that you're coming into at this point. You want to be cautious about trying to get excessively short on the Kiwi side. Now, if we get through 93, there's really nothing until 92.40 and real clear-cut targets at 91.70. So the downside targets are beautiful. Near-term resistance, bearish invalidation, still going to keep at the 2016 open at this point. So we'll bring down bearish invalidation to 94.33 or so. I just want to check this out. Bear with me one moment. Nope. No cigar. All right, so immediate risk is for a little bit of a rebound if we get into 93, up towards that February high, up towards 94.10. Areas of interest for possible reentry on the short side, inevitably targeting 92.40 and 91.73. Did you happen to go over Euro Yen? Steven says yet. It's approaching 114.18. No, I have not. So let me just jot down here, Kiwi CAD. Markets just rang, so I do need to run, Steve, but a quick look at Euro Yen, just because I know that it was on the menu. It was something that we were tracking last week. I have us at near-term support, or just above near-term support, 114.70, 114.72. I know we're testing the lower barriers, but if you take a sliding parallel off that low, Steve, from here, look where it converges. So I just didn't want to make the chart a little too messy there, but if you take a sliding parallel off the swing low, still leaves room for a drop into 114.74, 114.72. So I do think look for some support there. If this thing is more of a concerted breakout, that's what I want to see hold. Remember the longer term picture here. you're kind of wedged between this consolidation. So I could see a little bit more of a deeper drop towards that 114.72 area, but I'm kind of looking for support right around where we are, right around this region here. If that breaks, by the way, let me just do some quick real near-term stuff for you. Yeah, okay, so I'd leave room even down into 114.50. Kind of a dribble, maybe flirt with this trend line a little bit, and then wash out before it rallies higher. But I am looking for some support, upcoming support on Euro Yen. Would love to see it. Steve, does that help? A little lower would do you good for entry on the long side, I think. Hey, you're more than welcome. All right, guys, we're going to wrap it up here. Again, we'll be back on board tomorrow morning, 8:30 Eastern, for another session. Hopefully, we get a little bit more volatility on some of these plays, but do keep in mind we're heading into that FOMC minutes tomorrow afternoon. We'll give you a preview in the morning. Best of luck trading, and we will see you tomorrow. Cheers.